Why be so prescriptive with auctions versus, a simpler rule that would just move trading on exchange and then let exchanges compete and innovate for the best way to fill those orders?
Our current equity market structure hasn't been updated in about 17 years, and so much has changed in that time. In that time, we've grown to a market where about a third to a half of the market on any given day goes to the dark market rather than the lit market. And in individual security, sometimes it's well in excess of that. But in particular, well over 90% of marketable retail orders where you haven't set a limit price are going to the dark market. And so what we laid out is a series of proposals, one of them that you mentioned about auctions, another about best execution. I mean, go figure, but the SEC actually didn't have a best execution role. We relied on the self-regulatory organization, FINRA, for that. We proposed some changes in disclosure. We proposed, fourthly, some changes, important changes about harmonizing the rules in the off-exchange dark market and the on-exchange markets around minimum increments, not just quoting, but where you can trade.
Yeah, which I agree is very important.
Interestingly, I'm going to come to your question. Interestingly, the part of the 4 proposals that we've heard initially, and the comment period's still open until March 31st, but initially we're hearing a bunch from some of the biggest market participants. They don't really see the path for these auctions. So I want to address this not just to your listeners, but to the off-exchange market makers that might be saying, we don't want these auctions. We've proposed them. We need your feedback. We need your input. But the reason we did this was to instill greater competition. When over 90% of your marketable orders are going off exchange to a small handful of wholesalers that are not necessarily competing order by order, wouldn't it be good to get greater competition there? And so for a segment of the market, trades less than 200,000, we said, those should really probably be exposed. Trades from natural persons and the like. Trades be exposed to greater competition, particularly if they don't get you better than the middle of the market or better. And guess what? On the trades that they're giving you maybe a 1/10 of a penny or 100th of a penny price improvement, like 3/4 of those have mid-market prices available. And so our economists looked at this and they said that's about $1.5 billion of further price improvement that could be achieved. Why were we, in the proposal, you say, why were we detailed? Why did we have so many details? We were trying to lay out something that could be a fair auction mechanism. But give us feedback. If the time period should be shorter, we should hear that. If the time period should be longer, if it should be something different. But we're trying to make sure we can instill greater competition through this proposal. And look, it might even tell you that we need to hear from people that say, not only do we support the other rules, but we want greater competition through what's called regulation best execution, or in this auction rule as well.